Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, Friday the 13th, 2023. Busy week, first full week of the year, and then next week, Martin Luther King Day on Monday, it's a 4-day trading week again. So keep that in mind.
Our first vacation week of the year.
There you go. Moose, CPI on Wednesday was what got all the attention. What did you pick out of that report that was interesting?
The main thing I got out of the report is that A, it was in line with expectations. B, expectations for inflation are going lower, which is driving yields down in the bond market. And yes, C, it was a good number, and it was the third month in a row with a good number relative to expectations, which tells you that the market is thinking this is going to continue. The Fed continues to make noise. They're going to be vigilant on raising rates till they get to that 2% number. Whether they do or not, we don't know. We know there's probably at least one more rate hike built in. Is it 50? Do they do it in 225s? Not really that relevant as to the tone of their language at the next Fed meeting. So we will watch that. But it's going to be a little tougher sledding from here. And listen, after the blow off in the bond market from last year and yields rose, bond market investors are now getting some higher yields. They don't want to see them go away real fast.
No, it's been a decade since you've been able to buy the kind of yields, both in munis and taxable, that you've been buying the last 6, 8, 10 months.
Yeah, I mean, you've been able to get 5 to 6 on taxable investments. You've been able to get 4+. Back in November, you could get 5 on munis. You can't get that now, but you can still get in the 4s. And it's been a long time since you've had that. You're absolutely right.
Yeah, and as soon as we got that dampening effect on inflation and rates, you saw growth stocks pick up their head. And we've been fairly transparent that the risk we have at Cumberland in our core and our U.S. ETF strategies are strong growth moves, because we've tilted ourselves, towards value. And if value was to start to fade versus growth, we would have to realign there. Didn't really see it this week. Most of the value names traded well also. When I go back to last week, if you remember last Friday, market was strong. And I said if I had something to pick on negatively, it was that the defensive names were just as strong as the growth names.
Right.
That started to reverse this week. And today, for much of the day, and I can look at the print now, you look at staples and utilities, they had a tough time even staying positive.
Right.
So you are seeing equity investors take on more risk. It's not unusual early in the year. Keep in mind, the market peaked last year the first week. Right. It was the second trading day of the year was the S&P peak, and it was trouble and tough sledding from there on out.
I just add one thing too, is that part of this is in those inflation numbers and the bond market numbers, because I think when you start looking at some of the tech and growth names, they're starting to look down around the corner and saying, you know what, the discounting rate on these tech and growth names might be a little less going forward than we were anticipating.
Yeah. And we're going to stay balanced, because when you look at what's working, and I'm still going back, Moose, to that playbook of 2004, 5, 6, when the Fed had 16 rate hikes in a row. I know they were quarter point, not what we've seen recently. But what worked? Go back and look at your charts. Go back and look at what traded well. Basic materials, value. It was almost the last time precious metals had a bid. They've been dead for over a decade. Right. What's working now? Basic materials, industrials. David added, as I discussed last month, the gold miners and the silver miners to the U.S. ETF portfolio back in early December. They're up nearly 20%.
Yeah.
So that's been a heck of a trade. Well, again, whenever we're dealing with commodity-linked equities, we do have to look at it in the realm of a trade versus an investment. We don't get
you don't marry to them.
Right. So we'll take a look. We are a little bit overbought in those miners. We're overbought in the industrial metals as well. We've had a nice rip there. We'll see what the next couple of weeks bring. Never hurts in those type to take a little off and look to rebuy.
Absolutely right.
Well, one quick note. John and I worked on our Q4 strategy reviews. You can see the links below. We tried to cover the Cumberland strategies, what we did well, what we missed on, and just as important, what we see going forward in 23. One thing at Cumberland that you won't find is big predictions. We like to let the market give us opportunity, whether it's in fixed income or equity. Opportunity can be selling, opportunity can be buying. We don't like to box ourselves in to a forecast. So don't forget to like, comment, and subscribe so you can follow along with these weekly videos. And have a nice weekend. Again, don't forget, markets closed Monday for Martin Luther King Day.